The stock market is deep in the red amidst concerns that the Fed sees a gloomy outlook. Late mortgage payments swell and credit reports are about to get slammed. Hey everybody, JJ here, Bull Boom Bear Bust. It is Wednesday, April 13th, 2020. Welcome and thank you for joining me. Let's get into the news here. Quick shot here today. After the closing of the markets, we see all major indexes deep in the red. Dow Jones down nearly 500 points, S&P almost a 50-point drop, NASDAQ down over 100. Now, since the lows about a month and a half ago, we have seen a pretty big recovery in the stock market indexes. At the same time as we're seeing unprecedented levels of unemployment, beyond Great Depression levels of unemployment. So obviously, we know that this stock market is completely detached from the real economy. We know it's manipulated. We've documented that here. We've discussed that for several years. So now with that question out of the way, or the reason out of the way, we know what's happening. Let's talk about why the manipulators are letting this happen. Why are they letting stocks drop? Well, as you probably witnessed, they're using this crisis to implement unprecedented market intervention, unprecedented manipulation, unprecedented debt creation to try to quote-unquote fix the economy. Well, it's not going to work. And typically in these types of situations where we see this level of central bank government intervention, we see the rich get richer and the poor become even more destitute. So now we have people begging for stimulus checks, people begging for universal basic income, and basically people begging for the government to come in and save them. The problem is the government is what caused this in the first place. The debt creation, the central bank money pumping, causing bubbles everywhere, causing inflation all over the place is the problem in the first place. So now you see what they've done here. Now they've got people begging for more of the same to try to get them the next meal, to try to get them to pay their month's rent, and try to stop them from being homeless. I'm talking about the working class. Now a bright spot in this is going to be gold. We see gold jumping up to 1700, almost 1720, and actually intraday we did see gold break about 1730. And that 1730 level in gold takes us back to the highest point since about November 2012. Looking at a chart right here. And let's go ahead and zoom in on a 3-year chart here, ladies and gentlemen. That is an uptrend. So we do see a major flight to safety in gold. And this is just getting started. The crisis has barely started. We've only been shut down for a few weeks here. Now, of course, if you've been on this channel, you've been expecting this economic decline to happen for quite a while now. And now the manipulators, the market makers, the monopoly men, they now have the excuse to go ahead and implement all these actions now in all of the debt creation, money printing, stimulus, bailouts, you name it. Headline here out of CNBC: the Dow Jones falls for third straight day, losing 500 points after Powell's warning. So basically Fed chairman out there, Jerome Powell's out there saying that the Fed's going to have to do more, and we've already surpassed all of the stimulus and all the bailouts of the 2008 era financial crisis. And it's going to be more. It's going to be more debt. And the Fed has even said this. They've warned us very early on. They said we're going to have unlimited tools to fight this downturn. They want to stop deflation, right? So they want to keep the stock market propped up. Of course, they're going to let it drop, but only to give the narrative that we need more stimulus. And then they'll pump it back up again, right? This is what the central bank does. It's all they have is throwing more debt at the problem. Every dollar that's thrown at this crisis is just more debt. That's all it is. The Federal Reserve note, the dollar in itself, is a debt note. It's not an asset. It's a liability. Right? Every dollar that's created or printed or put out into the economy, put into the system, is more debt. That's all it is. That's what happens when you have this type of system. Another article right here. Powell says more policy help may be needed to pull U.S. out of economic downturn. Well, you notice it's the policy help, the word help should be in quotations, that got us into this mess. The Fed causes inflation, the money printing, the loose monetary system, the loose lending. It's caused price asset bubbles. And now the bubbles are threatening to deflate, and the Fed needs to come in with more of the same, right? More shots to keep the alcoholic buzzed. Another headline right here: Powell's gloomy outlook has investors predicting the Fed may make another move soon. So after all the intervention that we've seen, all the stimulus, all the new debt pumped into the system, why would Powell have a gloomy outlook? That tells us that what they're doing didn't work, but yet they're going to do more of the same. All right, so looking at all this, we have to take again a step back and ask ourselves, if the economy was so great, if this was the greatest economy ever, why after only about 2 months of a shutdown do we have unprecedented levels of debt that have to be thrown at this problem, at this crisis? Why are households not able to pay, a big percentage of households not able to pay or unwilling to pay their mortgage or their rent? Right? So even people that have money put away, the uncertainty is so great right now, they're choosing not to pay their rent. And a lot of times people have to choose between buying food or paying the rent or paying their mortgage. Which one do you do? It's a tough choice. Do you want to be homeless but have a full belly, or do you want to have a roof over your head but be kind of hungry? Right? It's a very tough choice a lot of people are having to make here. Now we are starting to see some states slowly open up. Some of them, just like we predicted, are having a lot of problems. The malls are barely any customers in many of the stores. Many businesses are opening only to shut down again. We talked about a couple reports ago. We talked about that. All right, but let's take a look at the situation here with mortgages. The mortgage bailout swells to over 4 million borrowers. And they're saying it's actually slowing down some. But think about that, over 4 million people choosing not to pay their mortgage. And remember, this debt is not going away. And many people think it's not going to hurt their credit. It actually is going to hurt the credit. We're going to look at a report here on that. But first, just a quick number here. We're approaching nearly 8% of all mortgages are in forbearance. And this is going to come back to hurt the credit of these homeowners that are getting forbearance. Now, supposedly there's regulation out there saying that this cannot be counted as a negative when it comes to credit scoring, but there's an area in the credit report, basically a comment section, and consumers aren't being told about that. It is still going to be looked at. If you have a mortgage in forbearance, you're going to have a very hard time as a homeowner getting refinanced or getting any sort of new loan. But just looking at the whole credit reporting in general, you're going to see a big part of the population, not just homeowners in forbearance, but a lot of people's credit is going to be slammed from this, and it's going to be a snowball effect. Believe it or not, car insurance companies in most states look at credit in determining your car insurance rates. Right, and that's just one example. Anytime someone with a lower credit score goes out and tries to get credit, you're not going to get as good of an interest rate. So if we do see prices correct, let's say in the housing market, there's going to be millions and millions of people that used to have good credit that are all of a sudden going to have credit and not qualify for a mortgage. And this is how you're going to see another aspect, another wave of this wealth transfer. You're going to have a lot of institutions, a lot of investors, a lot of mega corporations coming in, buying homes just like after the housing bust. And people that were waiting to buy a home, many of them, their credit's going to be so banged up, and they're going to be so cash poor, let's say, they're going to have a hard time coming up with a down payment, even if they did have a qualifying credit score to qualify for a mortgage. A quick excerpt out of this article here. It turns out that a workaround that can make it difficult for people with mortgages and forbearance to get another home loan after the crisis for as long as a year after the forbearance period ends, that can impact their ability to refinance or buy a home when times are better. Right? So the forbearance is going to come back to haunt millions and millions of homeowners when people look at their credit, when they try to get credit. Let's take a look at another article right here, then we're going to wrap it up today. This is out of Los Angeles Daily News. Landlords threaten to sue cities over coronavirus eviction bans. So now landlords are in a very tough spot. They're not allowed to evict people in many cities, but yet landlords a lot of times still have their own mortgage they need to worry about. So now the landlord's mortgage is going to go in forbearance a lot of times, and it's going to come back to hurt their credit eventually. But think about all the other carrying costs with being a homeowner or landlord that's got rental properties. You're going to have to pay the taxes still. You've got HOA fees in some cases. You've got insurance. You've still got upkeep and maintenance. So this is going to be a major, major housing crisis. A forbearance is not a solution. It's a Band-Aid on a broken leg. And this is going to go all the way up to the homeowners and the investors. But I think it's going to be mostly the small-time investors, the mom-and-pop investors, that are going to be hurt the most. The large corporate institutional investors, they have the money behind them to ride this crisis out and probably even gain more wealth after this next housing crisis starts to slam so many people here in this country. Okay, we're going to talk about home prices more, a little bit more detail in the next episode. Thank you everybody for being here, for watching this report. Please come back for more. Smash that like button if you like what we talk about and help us out. Hope everyone's well. Bye for now.